Friends, hi. The quality of managing your working capital is helping you to create more and more cash profit. As an entrepreneur or as a business owner, are you thinking about that how you are going to create more and more cash profit? Do you want to create more and more cash profit? If yes, then this video is very important for you. How you are going to create more and more cash profit and how you will assure that your working capital is in the standard way. You have enough working capital. How you will say that? What are those processes and mechanisms that you have to implement in your business so that you can say that you have the positive working capital? Now let you understand as an entrepreneur, as a business owner. You might be have a good profit, you might be have a good sale, you might be have a good assets. But if you are not managing the working capital and not executing the working capital efficiently, your business will become a accrual profit only. This is how it is going to help you to create the solid cash flow when you have the cash profit. So in this video, I am going to share with you the operating model or the operating cycle of the working capital that is going to help you to manage the cash profit, to create more and more cash profit. What you need to do here is that you have to watch this video till the end, subscribe the video, like this video, forward this video. This is very important that if it is helping something to your business, you should start to like, subscribe and forward. No more wait. So come to the point. Working capital. The operating cycle or the operating model of the working capital. How you will create the operating cycle of the working capital. Understand the working capital is the finance term, and I'm just going to give you the layman understanding about the working capital so that you would be able to clearly apply in your business. Working capital is nothing. This is something that you can call the current assets and current liability. The current assets and current liability. So working capital, current assets and current liability. Now coming to the point of inflow. How the inflow would become in your business. When you have the revenue will become receivable and receivable will be receive. So there are 3 R in the inflow side. You are selling or serving something to your customer, you have the sale. Similarly, you have the receivable. And once you are going to receive the money from the customer within the due date, within the time frame as per the contract term, as per the due term, you would have the more cash and bank balance. So these 3 R. Please keep in note, please frame in your mind the revenue, receivable and receive. Once you have the receive, then the complete chain of inflow is going to complete. If you have more receivable and not converting the receivable to receive, it means you have the more receivable only. That money is not in your hand. That money is in the customer hand, and customer is not paying the money to you. What happened over the period of the time when you are not realizing the money for 1 year, 2 year, 3 year, 4 year, that become bad debt. So revenue will be called as a nil revenue, non-revenue. You have sale or served something the 4 year back and that money you have not realized yet. What is the probability and what is the chances to get realized of those money? So as an entrepreneur, as a business owner, this is the capsule to make control in your business, the triple R, and make sure that you are not going to sleep. You are not going to leave the customer until you have the realization. Make a proper control system, make a proper follow-up system, make a proper visiting system to the customer in, and get more and more assurance and receive the money at earliest. Once you are receiving the money, then you will have more peace that now you have the cash in your bank. So revenue, receivable and receive is the part of your inflow, and that will become under the current assets. That will become under current assets. This is the inflow part. Now coming to the point of outflow. How the outflow would be? When you have the expenses, when you are procuring something from your supplier, isn't it? You have some procurement from your supplier, you would have the expenses. That expense would be under payable that you have to pay. Now again here, the smart entrepreneur and the business owner, the role of your as an entrepreneur, as a business owner, is a very, very critical. How you are going to pay to your suppliers. You have the payable. Now understand the payable and receivable. If you are not realizing the money and you are just paying to your supplier, what happened at that point in time? Your supplier is getting the money. Of course, you are the customer for that supplier. So how your supplier is beautifully following for the amount, following for the payment, following for the invoice, and you are paying within the due date. But when it comes to know about the customer side, your customer is not remitting the money to you. So this is the balance as an entrepreneur or as a business owner you need to keep in your business. If you have the payable, if you have the receivable, see the receivable and payable amount. See the receivable and payable amount. You have the more bank balance and you are just paying the amount to your supplier and not receiving the money from the customer. Then what happened over the period of the time? That you will not have more cash, you will not have a more working capital, you will have the negative working capital, and your business will be shut down because you will not have the amount or money in your bank account for paying the salary to your employees, paying to yourself as well. So make sure that when you have the receivable and payable, that you are making the strong combination, a strong working capital controlling mechanism. For that, if you need a one person to manage this all, basis of how much volume you have, you can hire. Make it control properly. Revenue, receivable and receive, expense, payable and paid. This is the inflow and this is the outflow. How your inflow and outflow is in the balanced way, you have to ensure, you have to take care. And once you are caring to your working capital, your business will automatically getting more and more cash profit. Because once you are receiving the money from your customer, that money is not the cost part only. Your cost is there, your profit is there, your tax is there. The three elements that you have to receive from the customer: your cost, your profit, and your tax that you are paying to the government on behalf of the customer. Understand this. If you are selling something, you have to pay GST. If you are selling something, you have to pay GST. You will not wait that, okay, customer will give the money first, then I will start to make the payment of GST. Is that kind of the arrangement you are making in your business? No, not at all. So you have to pay the tax every month. You have to pay tax every month. But if you are not realizing the money every month, that becomes that you are paying the cost, profit and tax. The three elements, these three elements are with the customer in, and customer are not making the payment to you. So this is the revenue, receivable and receive, expense, payable and paid. How you are monitoring, how you are controlling will help you to create more and more cash profits. So start in your business. Think about it. Think about it that how you are managing this in your business. What is the revenue positioning? What is the receivable positioning? What is the payable positioning? And how you are receiving the money within the time frame from the customer? How you are paying to your supplier? Metrics you have to prepare for that, and accordingly you have to implement in your business. That is how it is important to manage the operating cycle of your business. Then how you are going to manage the inflow and outflow. Then how you are going to get more and more cash profit. It is up to you only, and that would become only when you are making more control to your cash pulling, to your cash receiving, to your cash in your bank. That is how it is important in your business. So once you have the more cash, you have the more power to do into the new investment, into the new any initiative you can start, and to do something new through that cash that is in your bank. So start to managing the working capital with the revenue, receivable and receive, with the expense, payable and paid, and get to engage to yourself to get more and more cash profit. And that would help you to create more and more solid business platform in your business. Hope this is important for you and you are going to implement in your business to have a more control mechanism, to have a more control mechanism on the inflow side, to have a more control mechanism on the outflow side, and have a balance there in the equations of your inflow and outflow. start to implement, find out more opportunities to generate more and more cash profit in your business. This is Ansing signing out. Until we meet again. Thank you. Thank you very much.